Welcome to today's What Will Move the Market show. I'm your host Prem. It's Friday, November 14, 2025, and here is everything you need to know as the markets open for today. So let's dive right in with what happened on Wall Street overnight. It was a brutal session, folks. The markets suffered their worst day in over a month as investors took profits across the board, particularly in technology stocks. The S&P 500 dropped 1.7%, closing at 6,737. The Dow Jones slipped 1.7%, falling 797 points to 47,457. But the real carnage was in the Nasdaq, which tumbled 2.3%, ending at 22,870. The main culprit? Nvidia and the broader artificial intelligence sector got absolutely hammered, with the chip giant sliding 3.6%. Supermicrocomputer fell 7.4%, and Palantir Technologies dropped 6.5%. Broadcom wasn't spared either, losing 4.3%. Beyond the tech world, Disney disappointed after reporting earnings, falling 7.7%, despite beating profit expectations. However, Cisco did manage to gain 4.6% after delivering better than expected results. The selling was driven by two key concerns. First, there's growing skepticism about whether the Federal Reserve will actually deliver another rate cut in December, as many had been hoping. Investors are worried that the Fed might pause its cutting cycle. And second, there's the classic AI valuation debate. Many traders are questioning whether prices for these darling stocks have simply run too far too fast. Moving to the Indian ADRs that were trading overnight, let me give you the key movers. ICICI Bank ADR is up 1.41%, gaining 43 cents to close at $30.97. That's a positive signal for banking stocks here. Infosys ADR was softer, declining 0.76%, down 13 cents to $16.96. HDFC Bank ADR retreated 0.59%, losing 22 cents to $36.27. And Reliance Industries GDR slipped 0.68%, down 40 cents to $58.2. The mixed performance in the ADRs suggests selective buying in banking while IT remains under pressure from the global tech sell-off. Now let's look at the Asian markets, which are setting the tone for our open. Japan's Nikkei 225 has shown resilience in early trading, while Hong Kong's Hang Seng is consolidating after hitting a one-month high. In mainland China, the Shanghai Composite has been tentative as investors await key economic data, including November retail sales and industrial production numbers, which are expected to show some softness. The critical number we are watching is GIFT Nifty. As of the latest available data this morning, GIFT Nifty is indicating a positive opening for Indian markets, suggesting our domestic indices should open with some optimism. The Sensex and Nifty 50 closed essentially flat yesterday at 84,478 and 25,879 respectively, ending yet another consolidation day. This morning's GIFT Nifty action suggests our benchmark indices are ready to extend that consolidation, with a slight positive bias as investors await clarity on the Bihar Assembly election results being announced today and key US macro data expected in the session ahead. On the global stage, there are several developments to keep an eye on. Trump's administration continues to signal a willingness to renegotiate tariffs with India, particularly if New Delhi reduces its purchases of Russian oil. The latest comment suggests some moderation from the earlier stance of 50% tariffs on Indian goods. This is clearly important for Indian exporters and could provide some sentiment relief if progress emerges. Additionally, with the US government shutdown having just ended, markets will now be flooded with backlogged economic data, which could provide clarity on the Fed's path forward, though uncertainty around that December decision still weighs on sentiment globally. Domestically, here's what matters for Indian markets today. First, the Bihar Assembly election results will be announced this morning, and while these are state-level elections, they can have sentiment implications for equity markets. Second, there's growing confidence around rate cuts in the December RBI policy meeting after retail inflation fell to a record low of 0.25% in October. This is significant, and it's bolstering expectations for monetary easing from the central bank. Third, on the FII front, foreign investors have been net sellers so far this year, with cumulative outflows of around 256,200 crores through October. The domestic investors have stepped in strongly with inflows. Watch for any reversal in FII flows today. And finally, keep an eye on sectors like pharma, metals and realty, which showed strength in yesterday's session, as these could lead the way if the market sustains its positive momentum. From a technical perspective, here's what we need to watch. For Nifty 50, the immediate resistance is placed at 26,000 levels, with the all-time high standing at 26,277. The key support zone is between 25,800 and 25,700, aligned with the 50-day moving average. A break above 26,000 would signal genuine conviction for another push higher. For Bank Nifty, it made a fresh all-time high yesterday at 58,615, and it's been consolidating in the 57,200 to 58,600 range for the fourth week. Resistance is at 59,000, while support sits at 57,100 to 57,300. Watch for any breakout above 58,600 for fresh momentum. In the commodity space, crude oil is trading around $60 to $61 per barrel, staying relatively stable despite global uncertainties. Gold is trading around $4,200 per ounce after its 5-session rally, and silver is around $53 per ounce, both buoyed by safe haven demand following the US government shutdown resolution and expectations for Fed rate cuts. Base metals remain supported by expectations of steady global demand. Here's the bottom line for today. Markets are navigating between optimism around domestic rate cuts and caution over the Fed's stance abroad. The key is to stay selective and focus on fundamentally sound names in sectors showing relative strength. Don't chase the broad market momentum blindly, especially given the global tech volatility we're seeing. Instead, wait for dips to build positions in quality names and be mindful of event risks like the Bihar election results that could trigger intraday volatility. Remember, this is a good time to be a buyer on weakness rather than a seller on strength. Stay tuned for the evening wrap and send in your questions. Subscribe to this podcast to hear US every day. I am Prem, and we'll catch you on the next update. Have a great trading day ahead.